In this video, we'll be giving you tips for efficient bookkeeping. And here's our standard disclaimer. So some of the things we're going to cover: why good bookkeeping is so important in your real estate business. What are bookkeeping's three main functions? We're going to give you some tips for efficient bookkeeping. And here are some of those tips 1 through 5. And then we're going to give you some information about where to learn more about bookkeeping. So why is bookkeeping so important in your real estate business? Well, first of all, it protects you in the event of an audit. If you ever get audited by the government, which knock on wood has not yet happened to us, but eventually probably will, we want to have professional books that we can deliver to the government so they know that we've taken our real estate business very seriously. We've done the work that it takes to be able to get those books to be completely accurate and to categorize all the different expenses appropriately.
Bookkeeping also ensures that you never miss a deduction. Ultimately, you don't want to miss a chance to, let's say, lower your income so that you pay less in taxes, right? So you don't want to miss any deductions. And if you have really good bookkeeping, let's say your books are synced up with your bank account, you're never going to miss any of those expenses, any opportunities to deduct something.
Yeah, and it's really going to help you kind of separate out those deductions and tell which ones should be depreciated, for example, versus which ones need to be expensed. And ultimately, those kind of little details can make a huge difference in your tax bill at the end of the year. It also allows you to make better business decisions. So when you're looking at your books, when you're categorizing things, you start to see trends. You start to see expenses add up, for example, and you start to see maybe this is an area that I should intervene because over time this is costing me a lot of money. And so those kind of optics that you get from really good bookkeeping can help you maximize the profit of your business.
Yeah, and also what we do is we look at across our portfolio and look at all the different properties. How are they performing? And that also informs us how we want to change that portfolio. Maybe we want to sell one property because it's not performing as well as we expected, and then trade up for a different property.
And it gives us insights into all of our team members too, because we can compare our property managers and how they're performing on one property versus another group of property managers. We can start to see the trends through our books of what kind of expenses they're charging and what our profit margins are on those properties. And it can help us do decisions that maybe changing up team members.
Let's talk about bookkeeping's three main functions. And the first one is tax reporting. At the end of the day, we all need to file our taxes. And so the question is, what are you going to put in the Schedule E or the Schedule C, whatever report that you use? You want to make sure that you have accurate numbers when you're filing your taxes. The next one is legal compliance and asset protection. And the IRS requires every business LLC with a separate EIN, and a lot of people will get an EIN for their LLC to have a separate set of books. And so right there, the IRS is telling you have to do bookkeeping. The next is when you're talking about asset protection, it's really important to separate business from personal finances to make sure that you're not treating your business like it's a personal thing, right? If you can't separate it from your personal thing, if it's not a separate entity, then lawyers, when they look at it, they're going to maybe potentially pierce the corporate veil, which means that they're going to say this LLC is not a separate entity. It's essentially the same as the owner or the person that owns that LLC, and therefore they can go after your assets by piercing the corporate veil.
And this is also why you want to keep every single property, if it's in its own LLC, separately too, so that properties aren't tied together and somebody can go after multiple properties at once. So keep your books separate for every single business, every single property. And then we've mentioned optics for improving operations. We think this is really one of the main reasons you should be doing really great bookkeeping, because it's those optics that let you know how your properties are performing, that allow you to make more informed decisions and grow your portfolio over time because you're making better business decisions.
So let's cover some tips for efficient bookkeeping. And the first tip is automate wherever you can. And one example of this is opening up a bank account for every single property. This may feel really inefficient to you to do, because if you have 5 properties and you could just open one bank account, that sounds a lot easier than opening up 5 bank accounts. But from a bookkeeping standpoint, it's actually a lot easier for you if you open up a separate bank account and then connect that to your accounting software because all those revenue and expenses will come in separated by property. And so it's a lot more efficient. Another way to automate is to use a credit card for expenses that are not automatically debited from your bank account. One of the things that we try to do is make sure that everything is debited from our bank account. But instead of, like, let's say, paying cash for something, if you use a credit card, again, you can also sync that credit card up with your accounting software, have all those expenses be imported directly into your software. So you don't have to actually manually enter each of those expenses in by hand.
You should also auto debit as much as you can. So mortgage payments, utilities, any other expenses that you can auto debit it will save you time in the long run rather than having to remember to go pay different expenses. And that includes automating your rental payments into your books as well.
Yeah, we talked about syncing that bank account and credit card with bookkeeping software. It makes it so much easier than manually entering those things in, and it is a huge efficiency step. All right, let's talk about tip number 2, which is to align with your real estate accountant. And what this means is making sure that your accountant is using, for example, the same bookkeeping software. And for example, in QuickBooks, there's a way for you to ask your accountant. And anytime you have a question or an issue, you can just flag a specific transaction and your accountant will get a notification. They can go into your books, directly into your books, because they can get access to it because they use the same software, and then they can kind of address whatever issue that you flagged for them. Also, the other thing you want to do is you want to make sure that your accountant is on board with a way you classify different expenses or income line items. And so if you want to get those optics we were talking about, if you want to be able to see what's going on, the best way to do that is to separate out all the different expenses into different categories so you can see, let's say, how much utilities you're spending every month, how much you're spending in property management fees, right? How much you're paying in property taxes. And so unless you separate out all the expenses into categories and your accountant agrees with those categories, you're not going to be able to get those great optics. The next tip is to make sure that you set aside adequate time every month to do your books. The worst thing you could do is wait till tax time and have to do a whole year's worth of books right before tax time. That's really stressful. The way you reduce that stress, the way you make it much more enjoyable is to just schedule some time to do it, right? Schedule some time every month and make sure it's a substantial amount of time, enough time for you to get the books done and more, because you don't want to be stressed. You don't want to get behind either, because once you start getting behind, it really starts to build up and it really starts to become overwhelming.
Yeah, so Kenji just mentioned overwhelmed, but I want to also add that you miss the opportunity to intervene. So we've had situations earlier on in our portfolio where we put off the books for a while, and we would find that the property managers mismanaged with extra charges, or they, were charging us for things that we didn't necessarily agree to, or all these little charges that we missed along the way that started to add up. And because we were putting off the books, we weren't able to intervene when they happened. And so going back to your property manager 6 months later and being like, wait, you charged me to put up a for rent sign every single month for like 6 months in a row. Like, why did I get charged that? That wasn't in my property management agreement. A lot less inefficient, actually strains that relationship, whereas if you just caught it that first month and said, okay, please don't do that anymore, I don't even want to put for rent sign up, then that could have saved you a lot of money in the long term, and then also help preserve that relationship. So I would also say just do your books regularly so you can intervene and save yourself money and save those relationships.
Yeah, and another thing that you can do is build in some accountability. And so one way to do that is to set aside some time with your accountant. If you have something in your calendar, you're going to be meeting with your accountant and they're expecting to see complete books, that's going to really make sure that you stay on top of it. And so if you build in that accountability, that we found that to be a great way to make sure that you stay on top of it and you do it regularly every month.
Yeah, and your accountant's going to be able to give you the best recommendations if they can actually look at your books and see insights that maybe you're missing. If they don't have anything to look at, how can they recommend any different method that can save you on taxes?
Well, and also because you're typically filing your taxes after the year is done, they're not going to be able to intervene and do anything about it because it's already too late. The year is done. And so what you want to do is you want to do it real time and every month and that way, or every quarter here, so that you can actually make a change and actually change something and have an impact before the end of the year. All right, tip number 4, don't put your receipts in a box and deal with them at the end of the year, right? Upload those receipts on the fly as you're going, as you're incurring those expenses. And you just have to get in the habit of doing that. And so what I do is I have an app on the phone, and every time I go out and spend money on something, I just say, okay, I have to be diligent about stopping before I get in the car or whatever, or maybe in the car, take a picture of the receipt, upload it into an app on my phone like Expensify, or QuickBooks has an app where you can put it directly into QuickBooks. It's really efficient. And if you do that, that really saves you a lot of time. You can throw away that receipt. You don't have to put it into a shoebox.
Yeah, I also want to say with uploading receipts on the fly, the other thing it's going to help you do is never miss any of those expenses. Think about you order on Amazon and you order a book for your business, just kind of getting in the pattern of thinking of things as business expenses and capturing them at the moment will make sure that you maximize your tax savings, because you're not going and buying things for your business, but treating it in personal use.
Yeah, especially if you use cash. I mean, we talked about trying to use your credit card as an efficiency tip, but sometimes you have to use cash, right? And if you use cash, that's a time when you absolutely want to make sure that you upload the receipt and get it up there. Otherwise, you're not gonna remember to capture it.
And this goes with mileage too. So if you're local to your properties and you're driving to your properties, make sure you're doing the mileage as you do it, not trying to go back a week later or 2 weeks later and say, did I drive to the property? What day was that? How far was it? Just do it while you're doing it.
Okay, tip number 5, learn how to categorize data in a meaningful way. And I talked a little bit about this where we're talking about how to separate out income or expenses in a meaningful way, where it's reporting out exactly how you want to see the data. And so an example is rent can come in many forms. Like you get the regular rent payment for the tenant living there, but also there's some things like pet rent, which is separate, and parking rent could be another one. And so you can have multiple different income categories for rent. And if you have 2 options, you can lump it all together into one number, or you can separate it out especially if you want to track. And for us, we like to track things like pet rent and, are we increasing it? Are we growing our, let's say, laundry income, those types of things. It's really provide you insightful information if you categorize the data in a way where it gives you those insights.
Yeah, it's really about seeing the trends and then deciding where you're going to make interventions, because each property, as we've mentioned in some of the other videos, each property is its own business. And if you can increase the money that business makes, it's going to be worth money in the end, more money in the end when you sell it to the next investor. And so if you can say, I know that this property manager, is making this much pet rent, and say to them, hey, are there any other pets that we don't know about? Can you look into that? Can we make sure that if we have 2 tenants who are exactly the same who want to get into our unit, that we choose the one with the pets so we can maximize that pet rent? Those are some of the decisions you can make when you're following the trends to get insights into where your money is coming from.
All right, so here's where you can learn more. We have an article called 7 Ways to Get More Cash Flow Out of Your Rental Business Without Buying More Properties. And it's all about getting those optics, finding those opportunities by looking at the information, looking at the data that comes from really good bookkeeping and categorizing that data in a meaningful way. Here's the link to that article, so you can check it out.
Okay, we'll see you in the next video.